Hi, everyone. Thanks for joining us this morning. It's going to be hard to follow up from Abby Johnson's rather bullish assessment of Bitcoin and crypto assets. But nevertheless, we're here to talk about institutional investors and how do they start buying in, I guess. My name is Junian Wong. I'm a tech reporter for Quartz. I'm based in London. I used to be at CoinDesk. To my left is Brian Kelly, who runs a fund, BKCM. You trade across different crypto assets, right? Mm-hmm. Next to him is Marco Santori, who is the blockchain team leader at Cooley, LLP. Michael Morrow, who runs CEO of Genesis Global Trading, OTC market maker. And Timo Schläfer, founder of Crypto Facilities, a trading platform based in London, right?
Correct.
So I guess, let's just kick it open with a pretty broad question, right? What needs to happen for institutional traders, funds, to get comfortable investing in this space? Maybe, Brian, you want to start?
Yeah, it's funny. In the last several weeks, a lot of institutional investors have become a lot more comfortable. And I don't know if it's a shift in consciousness. It's just taken amount of time that people, and clearly the price rise always gets, it gets people's attention. But ultimately, I think the big stumbling block that I see for massive institutional investment in this is the infrastructure. All right, we don't have any prime brokers in the space. Funds like mine essentially have to self-custody. Those are issues that I'd rather not deal with, but we do, and it's a service we provide to our clients. But it's certainly something that needs to be built out before you can have something like CalPERS saying, hey, let's put 5% into this area. And so that's going to be 3 to 5 years from now, and it'll happen. There's a market for it.
Mm-hmm. And we should come back to this question of self-custody, and you should tell us how you get around doing this. Marco, any thoughts?
Yeah, I guess as the lawyer on the panel, I'm supposed to say that the prime impediments are legal. But no, they're not, in fact. Thankfully, this is one area where the law is fairly flexible, and there are real solutions to this. Are there legal issues? Yeah, of course. We have a whole team dedicated to this stuff, but for good reason. But these issues are solvable. All the issues around custodianship, right? Qualified custodianship in some cases, insolvency jurisdiction, just general contractual and commercial relationships between the parties. There are legal issues, but I'm happy to report they're not impediments. They're just things you have to deal with.
So no actual legal hurdles, but
well, look, in the fund space, there are issues to address. In the crypto space, it's the story of legal hurdles, essentially. I mean, there's a name your asset, and there's a different regulatory regime that applies to it. Take Bitcoin, for example. I don't know how many times already today I've heard somebody say, well, Bitcoin is under US law, right? Fill in the blank. And the answer is no. It doesn't matter what you fill the blank in with. The answer is no, because Bitcoin, for example, and virtual currencies generally, are a currency under the Bank Secrecy Act. They are property under the Internal Revenue Code. They are money under the securities laws. They are a commodity under the Commodity Exchange Act, and it's a floor wax too. I mean, you can go on, right? You can go on and on with this. So the legal issues surrounding virtual currencies, digital currencies, tokens, dApp coins are myriad. But I'm happy to say that in the fund space, the law is flexible enough that these are addressable problems.
Mm-hmm. So, Michael, so having heard that it's not really a legal issue, why do you think funds are not taking part, or perhaps they are gradually, and you're seeing that?
So, Genesis has been around since early 2013, and the buy-side guys who transact through us have been institutional by and large since we've been around, but the nature of what the institutional account has certainly changed. I think early on it was Silicon Valley, high net worth individuals and family offices. And it kind of largely stayed that way until about early 2016, when the hedge funds started to play more actively in the space. And I think we've seen, at least for our business, it's just an explosion of just interest and new applications to start trading with Genesis has absolutely exploded so far in 2017.
Can you sketch out that demand curve, like from early 2016?
So I would say, Genesis on average has done, call it 10 to 20 million a month in pure OTC volume starting in 2013. 2017, here we are, we're probably doing 6 to 7x that number on a monthly basis. So it's not just the interest level and folks wanting to talk about it, but they're actively transacting it and putting money where their mouth is, frankly. However, they're buy and hold guys. These are not actively trading guys. These are, I'm buying, I'll make my series of investments, and let's see what happens in some time. And I'll add a little bit to Brian as one of the impediments or obstacles for traders, institutional traders to play, is the hedging. And the derivatives market, which will segue nicely kind of into where Timo plays. But until we get an institutional size derivatives model, whether it be futures or options or anything like that for them to hedge exposure, I think it'll be difficult for folks in a long-only market to actually trade in digital currencies.
Perfect segue.
Well, I agree. I mean, so our trading platform lists futures on Bitcoin and the futures on XRP. And it's regulated by the FCA in the UK, which is the UK equivalent to the CFTC here in the US. And so, I mean,
I think we lost your mic.
yeah. So we have set up our products such that they are can in principle be traded by institutional investors, given the regulatory framework that we have. I think so. We launched 2 years ago. Until recently, one could say pretty clearly that the bulk of the volume in digital asset trading, Bitcoin trading, futures trading is probably still done by retail investors, and I think that's slowly starting to shift. And probably it's going to take a bit of time. Everyone needs to get comfortable with the space, with how the products work in the space. But I think there's a clear path to a much higher participation of the institutional investor side.
What are you seeing on your platform in terms of volumes, in terms of demands? Are you seeing a similar kind of upward trajectory?
Yeah, we have seen a very strong growth. So I think at the moment we do between maybe 2 and 10 million USD per day trading volumes. 2 years ago that was maybe 50th of this. So I think it's a pretty strong trajectory. I think the volume still comes to a larger extent from retail, and I mean we are not the only player in the market, and there are a couple of exchanges that offer futures on Bitcoin, for instance, that are unregulated. They have a pretty enormous trading volume on some days, which I think is driven 80-90% by retail investors. We'll see how that shifts.
Brian, I want to come back to this issue. I mean, like you were saying, there's no prime brokers, for instance, to service people like you, and you have to do things like self-custody, right? So I don't know, maybe you can sketch out, how difficult it is. Like, what do you do right now to deal with some of those issues?
So there are solutions, right? It's once you do it, it's not as difficult as it necessarily sounds. It's more cumbersome than anything else. So what we do is we have kind of multiple different ways that we custody the asset. So we will use some of the major players like Coinbase and Xapo and Gemini, and some of those have U.S. trust charters and have some kind of insurance. So that I love. I love to be able to do that. I love to be able to tell that to my clients. My clients love that, right? It's what we all know. We feel comfortable with it. There's a U.S.-based company with insurance there. But that only works for Bitcoin, Ethereum, Litecoin. Once you start getting into the other protocol coins, it becomes more difficult. So our solution is essentially to hold, our core portfolio in a cold storage solution, usually an air-gapped computer or thumb drive, something like that. We distribute, multiple copies of it in 3 to 4 different geographic locations. Fireproof safe, the whole works, safe deposit box, that type of thing. And that's our solution. It is cumbersome. Okay, now I want to get out of that position. Well, does it mean I have to walk down to the bank and get my thumb drive out? That's not exactly the most efficient way to do it. But we do have a long-term view that we want to hold a certain portion of these assets, for a long period of time. And then in terms of, what we have for Hot Wallet, again, we have dedicated computers that are over secure lines that are only used for the Hot Wallet, only used for trading. But it's a solution for now. It's cobbled together, but I would love it if somebody started a prime broker and I could just sign up with them.
You heard it here first, guys. free business idea. I don't know if you guys have anything else to add to that in terms of the nitty-gritty of dealing with some of these day-to-day issues.
Absolutely. I think hedge funds, they find themselves in a unique position where they're not allowed to custody their own assets, where they need a third-party custodian for what they do. And so even before as they're figuring out, the investment thesis and how much they want capital they want to allocate to the asset class, the conversation always turns to, okay, how do I hold this thing? And for folks that have been in Bitcoin for a long time, it's kind of backwards to want to just give away your private key, right? I think there's plenty of folks that got involved to have control over your own money. But these guys want other people to hold it simply because for stocks and bonds, they don't self-custody everything else that they invest in across their fund. And so the way they think about it, they'd rather trust a third party to kind of get that done. And it's just a question of, will a trusted third party start supporting some of the altcoins that Brian was talking about? It's easy enough to get support for Bitcoin and ETH and some of the largest market cap guys, but if you go down, outside the top 10 and try to find businesses that are willing to support that, it becomes a narrow list. But that could be the business opportunity for folks, to get out there and create a product around some of the altcoins.
I think that the incentive structure and the relative leverage is still developing. So from a deal perspective, you named, Brian, I know you named a few of the larger custodians, and I've reviewed a lot of their custodianship agreements, and they're awful. They're awful, and not because lack of counsel, but just because this is such a new space. This is a brand new space. They're using words like custodianship. Do you know what it means to custody rep? Auger rep? Do you know what that means? I guarantee you judges don't know what that means. I guarantee you federal prosecutors are eager to make up their own definition. And when you read these agreements, there's a number of legal issues that I'm sure you'd be eager to get into at some point, but all of these unique characteristics of tokens, of the relatively simple stuff like Bitcoin, make it really challenging to contract around. For example, you talked about how custodians want geographic diversity in the storage of their private keys. Great idea from a technical perspective. Super smart. Natural disasters, political unrest, lots of reasons to split up private keys in multiple jurisdictions. But what happens in the case of insolvency? What happens when one of those custodians goes belly up? What happens when they enter an involuntary bankruptcy? Where are they going to enter it? What law is going to apply? What happens to your money? Those questions are not answered today. And so if you're looking at this through my eyes, you're seeing, well, how else can we correct for those risks? How else can we solve for that? What other protections can we build in? I don't represent custodians by and large. I represent funds, at least in this particular vertical. And there's a lot of different options out there. And this is just one example as far as the insolvency jurisdiction goes.
Sure.
Thank you very much.
Great legal advice there.
No, that was
That was not legal.
Journalists think you're slick. No, no, no. Not legal advice. General information about the law.
Educational purposes only. You're right. Timo, anything to add to that?
Yeah, maybe just one point to add. I think if you look closely at the insurance agreements that some of the custodians have, I mean, it's not really clear if the worst case happens, whether they really kick in. And I think so far we haven't seen any test of these insurance agreements. So I think there's some additional uncertainty coming from this. I think one interesting thought is that a way to get around this is to have potentially a investment vehicle that is settled in cash. Then there's no digital assets to hold. It's probably easier to get that through compliance. Everyone is slightly more comfortable.
Marco, I know you wanted to talk about some of these the token offerings, basically.
Oh yeah.
And some of the issues around that. Do you want to kick us off down that rabbit hole?
Yeah, that's very well put, actually. So we represent a number of token issuers, and of course the funds investing in them, but also the exchanges that are carrying them. We do their regulatory work, and the token issue is like green fields for the law. I know that there are a lot of people who insist they know how this is all going to shake out, and I am insisting they're wrong. They probably don't know how this is all going to shake out. But from a funds perspective, so I'll talk about one important issue, and that's the issue of custodianship. So most of these tokens exist in a developing area of the law. It's not a legal gray area. Lawyers don't use that word. We say it's a developing area. It's like saying it's a developing country. We don't call it the third world. We call it a developing country. And so the same applies to the law. But the area of custodianship is important in as much as most of these things we're not really clear on the risks of them being securities. We do a lot of work in outlining those risks and trying to make those risks clearer to investors and to issuers and to the exchanges and all the folks in between. But by and large, there's no real law on point on this. The case that tells you whether your token is a security or not is 71 years old. That's crazy, right? That's absolutely crazy, and there's been plenty of cases interpreting it since then. It's Howey. You guys are all probably familiar with it. If you've even brushed by a lawyer that's in the token space, then you've probably heard of the Howey test. But this is an important distinction, whether or not this token is a security, because it changes your obligations as a fund. Of course, it changes your obligations as an issuer. But if you're an investor, institutional or otherwise, it changes your obligations. One of those obligations is, of course, qualified custodianship. It's something we talked about in the hedge fund context. By and large, funds can hold whatever they like. There are restrictions when it comes to hedge funds, or just restrictions when it comes to VC funds. But whether you're custodying a security and whether you're custodying just some other kind of general intangible, well, gosh, that defines your operational model as a fund, right? I mean,
yeah, I mean, if you're holding a security, there's a lot more you have to do,
yeah.
A lot more places you have to register, a lot more capital you have to have. So yeah, it changes it an awful lot. I mean, dramatically.
But maybe we can get the fund perspective, right, Brian? So how far down the list of the most traded, most valuable tokens, how far down the list are you looking in terms of what you're trading and what you're holding?
Generally top 10 to 20. Probably 15 to 20 are some that we don't have a very big position in, and it's partly due to liquidity as well. So if we can't, there's not a lot of reason to take a very small position. We may like the idea, and I like the technology, but if we can't get a large enough position that we won't move the needle, then it doesn't really matter.
And what kind of liquidity, how much volume do you need to see before you can start thinking seriously about it?
Generally speaking, I would like to be able to be out of a position within a week. So that's kind of how I gauge it. We have not run into that yet. I would love to have enough assets under management that's a huge problem for me. That would be great. That I'm too big for the market. That'd be fantastic for my personal situation. So far we haven't run into that. But my goal is to have liquidity within a week in any of these tokens. So far, we've been able to do liquidity in a day. I mean, and it's funny because a year ago when I set about saying, okay, I'm going to have a dedicated digital currency fund, if somebody said, hey, I'm going to write you a check for $10 to $20 million, I would have told you, well, I'm probably just going to buy Bitcoin. And I can't do much more with it because there was no liquidity. I think easily now $100 million wouldn't be an issue whatsoever under the liquidity. And if I think, what's it going to look like in Jan 1 of next year, particularly with Japan and Korea. And Japan, in terms of liquidity, I've talked to a couple people about it, but they trade, the retail foreign exchange, Forex traders in Japan trade $10 trillion a quarter in FX. I mean, they're the biggest traders in the world. So I wouldn't underestimate that liquidity that is going to be coming to this market now that Japan has opened up and you're going to have a lot more traders and investors there.
And we do see, in terms of, BTC yen trading, for example, volumes have just exploded, right?
Right.
Partly because it's fee-free trading, but
Yeah, and so now there's some kind of legal framework around it from Japan. So I would expect that volume to stay there and if not increase.
Michael, what, in terms of tokens and currencies, how far down the list are you guys dealing with?
So we're probably just top 5 only, because that's where the bulk of the institutional investor demand is going to be. Genesis will probably only play in a space which we can probably do a few $1 million worth of trading volume on a monthly basis. And on top of that, because we are based here in New York, we are subject to the BIT license at the Department of Financial Services, and we have to go get permission before we're able to add another token. And getting them to approve an additional token for Genesis is a painstakingly long process.
How long are we talking about here?
So we asked for permission to trade a token in September, and I'm still waiting. So here I am, 8 to 9 months later. Never mind the actual application that we put in 2015 that is still pending in front of the DFS. And so I wouldn't hold my breath on that. So it is I think it's easier case to make if there was the volume to kind of back it up, right? If there was a brand new token that was very liquid trading that we could do $5, $10, $15 million on a monthly basis, I think the context of the conversation changes, even with the regulators.
And it's a chicken and egg situation.
100%.
Yeah. Do you have visibility into what they do in terms of approving a token for you to
That's a
trade?
black box as far as I'm concerned. I have no idea what they do.
Is there a conversation about, it seems like this is really not fit for purpose, right? This is a serious issue for businesses like you. You're not an exchange, for instance.
Correct.
Is there a conversation about potentially relooking at the BIT license and how it applies to businesses like yours?
I would love that conversation with the DFS as to whether or not the regs even apply to our business in a non-custodial prop trading kind of operation. But we just happen to be located in New York, and I think from the DFS perspective, it's difficult for them to have a BIT license out there and have the largest OTC trading desk be unregulated by the DFS. Is probably not something that they want to kind of deal with. And so here we are, and we kind of have to deal with it.
You just live with it. Marco, I feel like you might have an opinion on some of this.
I'm just sitting here shaking my head. If you read my testimony to the DFS back when the BIT license was being considered, it's essentially me saying, I know you're going to do it, but please don't do it. And they did it anyway. And now we have a really like a Soviet situation here in New York. And there's a number of my clients have just pulled out of New York. There's a tremendous backlog of applications just waiting to get reviewed by DFS. They don't have the resources or the manpower to understand anything about tokens at this stage. to give you a sense of the politics behind it, treading lightly, there was an entirely new team that came into DFS after the BIT license came into being. And this new team is not the team that spent so much time trying to understand the Bitcoin space that created this license. And well, frankly, the space was a lot simpler back then. There was just this thing called Bitcoin, and they just sort of, as a CYA measure, they started talking about virtual currencies in general, because the hope there was that would make the regulation more elastic. But all it did was broaden this regime to things it's just not applicable to. The token space is a primarily commodity-driven space. It is not a currency-driven space. The consumer protection issues, frankly, are not there yet. They just aren't there yet. Mom and pop are not investing in Gnosis. I mean, let's be real, right? Are there consumer protection issues? Of course there are. Are they the domain of financial services regulation? Absolutely not. Absolutely not. We have consumer protections controls in place that can do a fine job of addressing these issues, given the policy goals. Frankly, the policy goal of promoting innovation and promoting capital formation, promoting these new spaces, these new innovative spaces, far outstrips the consumer protection goal in the token space today. Yes, thank you.
Got your own fan club.
I do. I think there is a consumer protection issue. I just don't think we're there yet. And I think that we're losing more than we're gaining with these laws.
So as far as Genesis is concerned, why not move out of New York?
So the way the BIT license works is you could be either located in New York or have New York customers. So it doesn't really matter. We could be across the river. If we have a hedge fund client, and which we do in New York, you have to apply and abide by the laws of the BIT license. And so we've thought about lots of different reorgs and moves and things like that. But frankly, one of the reasons we are in New York is because of basically so much institutional capital that is here. And in a way, we're already a registered broker-dealer. We have SEC and FINRA oversight into our business. And so the additional regulation aspect, the AML, KYC stuff, that's nothing new. So the actual regs don't place that big of an additional compliance hurdle on our business because we already have to abide by them for the BD purposes anyway. However, the whole purpose of going to them for permission to do anything, that is a bottleneck, obviously, to the growth of the business.
Mm-hmm. Timo, I don't know if you can maybe sketch out some of the regulatory landscape that you deal with in the UK and Europe.
Yeah, so we are regulated in the UK, and the way it works in Europe is if you're regulated in one of the EEA countries, you can passport your regulatory permissions to the other 28 or 27 EEA countries. So it's relatively, you don't have to get regulated in each and every single European country, which is obviously good.
You have passporting in Europe.
Passporting, yeah.
Passporting. We don't have that here.
Yes, that's
tragic.
That's the issue. So there are two things when it comes to regulation that are regulated. And the first thing is the whole custody, money transmission, and that kind of stuff. And I think that's regulated pretty much everywhere. It's regulated in the US. It's regulated in Europe. And the second thing is the trading itself. And I think the spot trading is largely unregulated, both in the US and in Europe. So if you do spot trading, if you have a spot exchange, the only thing you really have to care about is money transfers and KYC and AML and that kind of stuff. In our specific case, it's a bit different because we do futures on Bitcoin. So if you do that, then you create a security which is regulated. And I think there again, the story is pretty pretty much the same in US and in Europe. So the way they regulate it is essentially the same way as they regulate any other futures. So whether it's a future on a stock or the S&P 500 or on Bitcoin doesn't really matter. So you have to go through the regulatory process essentially if you want to list such a product.
What are your Brexit contingency plans? Because with Brexit, passporting, will no longer be possible.
We'll see. Give it some time. I have more urgent things to worry about at the moment, so we'll see. I think the Brexit thing would kick in 2 years. So if there is visibility that there won't be passporting, then you have to probably move to mainland Europe sometime ahead, which probably will be possible. I mean, we wouldn't be the only one who has that problem. So let's see what happens, and hopefully the passporting will stay in place.
Mm-hmm. So I just wanted to make one point about, because we all brought up, whether or not being in New York or being in a particularly regulated area. I mean, this is we all know, this is a global investment product, right? And so as I think about it from the fund's perspective, I've thought about moving as well. And I may do that because if there's a fund in the UK, or if there's a fund in Hong Kong that can trade a product that as a US-based investor I can't, I need to compete in the space. As much as I love being here in New York and want to be here, if I can't compete against everybody else, then I will move. And I would say the U.S. is rapidly, faster than anybody realizes, rapidly losing its global financial hub status because of this.
What are some jurisdictions that have, that are on your radar?
UK and Hong Kong. Those are the two biggest. Mm-hmm. Yeah.
Mm-hmm. I wanted to come back to you, Timo. In terms of cryptocurrencies that you would think of developing new products for, like what are some of those? What are you looking at, and when would you get into developing futures for some new cryptocurrency?
We are pretty flexible there. I mean, we have permissions to list futures and options on essentially anything. So if we think we want to add something, then we can do that. So the FCA is not a light touch regulator by any means, but I think it's a really sensible regulatory framework.
What kind of demand signal would you have to see from customers, before you get into that process?
I think there's, in particular in the last couple of weeks, very strong demand to trade the top 10, 20 digital assets. I mean, it can change in 2 months. The market might dry up again, at least temporarily, but then it's going to change again in 8 months. So, I think there's pretty strong demand for the top assets.
And right now, what are you offering?
Right now, just Bitcoin and Ripple XRP.
Bitcoin and XRP?
Yeah.
And with plans to introduce more? Right?
Yeah.
We have a couple of minutes left. I don't know if there are any particular points that you guys want to bring up.
Well, I mean, I would just say, to go to like kind of the character of the institutional investor that I'm seeing at this point.
Yes.
It is not the major pension funds at all. 6 months ago, it was family offices. You're starting to see more venture capitalists get into it. Some more kind of bigger institutions where they might be the institutional investment arm of a corporation. A small to mid-size institution that wants to allocate 1% of their assets to the space. But so that's slowly changing. And if I look at the space, we're probably 3 to 5 years from major pension funds even saying, hey, I want to come in here. But if you look at what's going on now in the market in general, and people say, hey, are we in the bubble or not? Yeah, sure, man. Are we in a price bubble? Will it crash at some point? Absolutely. But I would say we're within the first innings of institutional investors getting in here. So if you have any type of price pullback, there is still a wall of money that is going to be coming into the space. At least that's the bet that I'm making, and it's starting to pan out. But there is still a wall of institutional money that hasn't even touched this space yet. And if you just got 1 to 2% of all the institutional money out there, you would have a ton of money coming into a very small space.
Mm-hmm. Are you seeing similar, maybe Michael?
100% agreed.
I mean, maybe you can elaborate on that. Like, how are what are the differences that you're seeing?
I mean, I think the conversations that I'm having now are with and I was telling these guys before that instead of millionaire conversations, I'm having billionaire conversations within the last probably 6 weeks. And so I completely agree with Brian. There's a lot of cash still waiting to be deployed. And so while the price run has been phenomenal, and I'm not making price predictions, but there's plenty of money that is still to be deployed all across the space.
Well, thanks very much. We're out of time. And on that bullish note, thank you to my panel. And thanks for listening.